Warning: if you are receiving Social Security, SSA, SSI, or SSDI benefits, what I am about to share with you in this video could be the most important thing you hear all year. Because right now, across the United States, a brand new banking rule is quietly rolling out, and millions of American seniors have absolutely no idea that this rule could directly impact how and when their monthly benefit check hits their bank account. We are talking about your Social Security payment, your SSI check, your SSDI deposit, the money you depend on every single month to pay your rent, buy your groceries, cover your medications, and keep the lights on. And this new banking rule, if you are not aware of it and if you are not prepared, could freeze that money in your account without any warning whatsoever. Now, I know that sounds alarming, and honestly, it should get your attention, because this is not a rumor. This is not political noise. This is not some conspiracy theory floating around the internet. This is a real, documented policy shift that financial experts across the country are calling one of the biggest changes to hit seniors' bank accounts in years. And the scary part is, most seniors receiving Social Security, SSA, SSI, and SSDI benefits have never even heard about it. Think about this for a moment. What would happen if you woke up on the day your Social Security check was supposed to arrive and the money was not there? What if your account was frozen? What if you could not access your own funds for 3, 4, or even 5 business days? For most American seniors living on a fixed income, that is not just an inconvenience. That is a crisis. That is missed rent. That is empty prescriptions. That is going without food. And that is exactly the situation that thousands of seniors are already finding themselves in right now because of this new banking rule. But here is the good news. You do not have to be caught off guard. Because today, right here in this video, I am going to break down everything you need to know about this new banking rule in plain, simple English. No confusing bank talk, no government jargon, just the facts you need to protect your Social Security, SSA, SSI, and SSDI benefits and your peace of mind. So do not click away. Stay with me, because what comes next could protect your money and your financial future. Let's get into it. So let's start from the beginning, and let me give you the background you need to fully understand what is happening here. For decades, the American banking system has operated with a very specific set of rules and protections that were designed to keep consumers safe, especially seniors who depend on fixed income like Social Security, SSA, SSI, and SSDI benefits. These protections were put in place after hard lessons learned from financial crises, bank failures, and real situations where ordinary Americans lost access to their money through absolutely no fault of their own. The system was never perfect, but for most seniors receiving federal benefits, those protections meant one very important thing. Your monthly deposit would show up like clockwork, land safely in your bank account, and be available for you to spend without any drama, without any delays, and without any surprises. But here is what has changed. And this is the part I really need you to pay close attention to. Over the past year, there have been a series of very significant regulatory discussions happening at the federal level, inside agencies like the Federal Deposit Insurance Corporation, also known as the FDIC, the Consumer Financial Protection Bureau, also known as the CFPB, and the Office of the Comptroller of the Currency. Now, these are the agencies that oversee how banks operate across the entire United States. And the conversations they have been having are directly connected to 3 very important things: how banks handle government benefit deposits, how accounts are verified, and what happens when a bank flags your account for review. Most seniors never hear about these conversations because they happen inside regulatory documents and policy meetings that most of us never see. But the effects of those conversations trickle all the way down to your personal checking account. And that is exactly what is happening right now in 2026. So what exactly is this new banking rule, and why does it matter to you personally? In plain, simple English, the rule relates to something called account verification and fraud prevention protocols. Now, I know that sounds complicated, so let me break it down for you in the simplest way possible. Banks across the United States have been under enormous pressure from the federal government to crack down on fraud inside the Social Security and benefit payment system. And the truth is, fraud is a real problem. There have been billions of dollars lost to fraudulent Social Security claims, identity theft specifically targeting seniors, and fake accounts that were set up by criminals to intercept benefit payments before they ever reached the real recipients. And while that is absolutely a serious problem that needs to be addressed, the way that some banks are choosing to respond to that pressure is creating very serious and very real complications for legitimate seniors who have been receiving their benefits honestly and legally for years. Here is exactly how it works in practice. When a bank receives a deposit into an account, or when an account shows any kind of pattern that their automated computer systems flag as unusual, the bank now has the right, and in some cases under the new guidance, the actual legal obligation, to hold that deposit, review the account, and in some situations completely freeze access to the funds until that review is finished. Now, for most people, that might sound like a minor inconvenience, but for a senior who is living on Social Security and counting on that deposit to pay rent on the first of the month, a hold of even 3 to 5 business days can be absolutely devastating. We are talking about missing rent payments. We are talking about not being able to buy groceries. We are talking about not being able to pick up life-saving prescriptions. This is not a small thing. This is a real crisis for real people. And it gets even more complicated than that. The new banking guidance also touches on something called Know Your Customer requirements. Now, banks are already required to follow these requirements, but they are being significantly expanded and updated under the new rules. Under these Know Your Customer requirements, banks must verify the identity of every single customer and make absolutely sure that the accounts they are operating are being used legitimately. For most younger customers who regularly update their personal information, use banking apps on their smartphones, and respond quickly to emails or text messages from their bank, this process is largely invisible. They never even notice it is happening. But for seniors, especially those who do not use smartphones, who may have limited internet access, or who simply are not checking their email every single day, a verification request from the bank can go completely unnoticed until it has already become a serious problem. Let me paint you a real picture of what this looks like in actual everyday life. Imagine a 74-year-old woman. Let's call her Margaret. She has lived in the same home for over 20 years. She has had the same checking account at the same bank for more than 2 decades. Every single month, without fail, her Social Security check lands in that account on the same day. She uses that money to pay her bills, buy her groceries, cover her medications, and take care of everything she needs to live independently and with dignity. One day, her bank sends her an email asking her to verify her identity as part of a routine compliance update. Margaret does not check her email very often. She misses the message completely. 2 weeks later, her account is placed under a temporary review hold by the bank's automated system. Her Social Security deposit comes in right on schedule, but she cannot access the funds while the review is still pending. She goes to her local bank branch, and she is told that she needs to bring in 2 forms of government-issued identification and proof of her current address to resolve the issue. It eventually gets resolved, but not before she missed a bill payment, went without groceries for several days, and experienced enormous stress and anxiety that no senior should ever have to go through. And here is the hardest part about that story. Margaret did absolutely nothing wrong. She was not committing fraud. She was not doing anything suspicious. She was simply a senior citizen who missed an email, and that one missed email triggered a chain of events that temporarily cut off her access to the Social Security benefits she had earned and depended on. And this exact scenario is happening to real seniors all across this country right now. Not in some distant future, right now, in 2026. Now let's talk about something very important. What about the federal protections that are supposed to protect your Social Security deposits? You might be wondering, wait, is there not a federal law that protects Social Security and SSDI and SSI deposits from being frozen or withheld? And the answer is yes, there absolutely is. Federal law does provide very important protections for Social Security and other federal benefit payments that are deposited electronically into a bank account. Specifically, when a bank receives a garnishment order, meaning someone is trying to legally collect a debt directly from your account, the bank is required by law to review the account and protect a certain amount of funds that represent federal benefit payments from being taken. That protection is real, and it absolutely matters. However, and this is an absolutely critical point that every single senior receiving Social Security, SSA, SSI, and SSDI benefits needs to fully understand. That federal protection applies specifically and only to garnishment situations. It does not prevent a bank from placing a hold on your account for compliance reasons or identity verification reasons. Those situations are treated as completely separate matters under banking law. This distinction is incredibly important, and it is one that many seniors, and honestly even some financial advisors, are simply not fully aware of. So let me be very direct and very clear about this right now. If someone is trying to take money out of your Social Security benefits to pay a debt, in most cases that is illegal, and the bank is required to protect those funds. But if the bank itself has flagged your account for a compliance review, or if there is a suspected fraud issue on the account, the bank has full legal authority to restrict your access to those funds while their investigation is underway. So now that you understand exactly what this new banking rule is and how it works, let's talk about the people who are most at risk. And I want to start with SSI recipients, because this is a group that I am particularly concerned about. SSI, Supplemental Security Income, is a needs-based program. And what that means is it is specifically designed for individuals who have very limited income and very limited financial resources. The monthly payment amounts for SSI are lower than Social Security retirement benefits or SSDI payments. And the people receiving SSI are often among the most financially vulnerable Americans in this entire country. For an SSI recipient, losing access to their benefits even for just a few days is not simply an inconvenience. It is a genuine financial emergency. It is a crisis that can spiral very quickly into missed medications, missed meals, and missed housing payments that put their entire living situation at risk. And yet, SSI recipients face exactly the same account verification challenges as everyone else receiving federal benefits. In fact, in some ways, they face even more challenges. Because SSI recipients may be less likely to have established credit histories that banks use to verify identity. They may be more likely to live in shared housing situations that complicate address verification. And they may have far more limited access to the kinds of official documentation that banks typically request during a compliance review. So if you are an SSI recipient watching this right now, please pay extra close attention to everything I am sharing in this video, because the stakes for you are especially high, and the importance of being prepared cannot be overstated. Now let's talk about SSDI recipients, because the situation for this group comes with its own unique and very serious challenges. SSDI, Social Security Disability Insurance, is specifically for individuals who have worked and paid into the Social Security system throughout their careers, but who are now unable to work due to a qualifying disability. Many SSDI recipients are managing serious and complex health conditions every single day. Conditions that affect not just their ability to work, but also their ability to respond quickly to bank inquiries, travel to a branch location, navigate complicated online verification processes, or deal with the kind of bureaucratic back and forth that resolving a bank account hold requires. Some SSDI recipients are dealing with cognitive impairments that make it genuinely difficult to understand and respond to official correspondence from their bank. Some have serious mobility issues that make visiting a physical bank branch not just inconvenient, but actually impossible without significant assistance. And some are managing mental health conditions that make these kinds of stressful financial situations genuinely overwhelming in ways that go far beyond simple frustration. The new banking guidelines, because they were designed primarily with fraud prevention in mind, do not always account for the very real and very significant barriers that disabled Americans face when trying to satisfy identity verification requirements. And that is a serious problem that every SSDI recipient in this country needs to be aware of right now. So what can you actually do to protect yourself? Let's go through this step by step, because this is the most important part of everything I am sharing with you today. I want you to walk away from this video feeling informed, feeling empowered, and feeling ready to take action. Not scared, not overwhelmed, ready. So let's go through each step carefully and clearly. Step number 1, update your contact information with your bank immediately. This is the first and most important thing you can do starting today. Make absolutely sure that your bank has your current and correct contact information on file. Now, I know that sounds incredibly simple, but you would be genuinely surprised by how many seniors have not updated their phone number or their email address with their bank in years. Banks are increasingly using fully automated systems to send compliance notices and identity verification requests. And if those notices are going to an old phone number that you no longer use or an email account that you stopped checking years ago, you may never see them until your account is already under review and your benefits are already on hold. So this week, not next week, not next month, this week, I want you to call your bank or visit your local branch in person and confirm that they have your current phone number, your current mailing address, and if you use email, your current email address. This one single simple step can prevent an enormous amount of problems before they ever start. Step number 2, understand your bank's direct deposit policies before there is ever a problem. The second thing I want you to do is take the time to fully understand what direct deposit protections already exist for your Social Security, SSA, SSI, and SSDI benefits at your specific bank. Go to your bank and ask a customer service representative directly. What is your policy for holding or reviewing direct deposits from the Social Security Administration? Ask them specifically what kinds of activity trigger a compliance review. Ask them how long a review can legally last. Ask them exactly what you would need to do to resolve a hold if one were ever placed on your account. And most importantly, write down everything they tell you. Get the full name of the representative you spoke with and the date of your conversation. Having this information clearly written down and easily accessible means that if something ever does happen with your account, you are not scrambling to figure out the rules in the middle of a crisis. You already know exactly what to do and exactly who to call. Step number 3, consider building a small emergency fund in a separate account. Now, I completely understand that for many seniors living on a fixed Social Security, SSI, or SSDI income, saving extra money is genuinely difficult. And I am absolutely not suggesting that this is a requirement or that you should feel pressure to do this if it is simply not possible for your situation. But if there is any way to set aside even a small amount, even just a few $100s, in a completely separate account from your primary benefit deposit account, that small cushion could be the difference between a stressful inconvenience and a genuine financial emergency if your primary account is ever placed on hold. This could be a basic savings account at the same bank. It could be an account at a local credit union. It could even be a prepaid debit card that you keep funded specifically for emergencies. The goal is simply to have some breathing room, some financial cushion, so that if something unexpected happens with your main account, you are not immediately in crisis mode. Step number 4, keep the most important phone numbers somewhere easy to find. This step sounds simple, but it is genuinely critical. Know the direct phone numbers for both the Social Security Administration and your bank's customer service line, and keep them written down somewhere that is easy for you to find at any time. If there is ever a problem with your Social Security, SSA, SSI, or SSDI deposit, time matters enormously. The sooner you can get on the phone with the right people, the sooner the problem can be identified and resolved. The Social Security Administration's main phone number is 1-800-772-1213. They are available Monday through Friday from 8 in the morning until 7 in the evening. If you ever have a problem with your deposit, call them first. They can tell you immediately whether your payment was sent, when it was sent, and exactly how much was sent. That information is absolutely crucial for any conversation you then need to have with your bank about why the funds have not appeared or why your account is under review. Step number 5, consider adding a trusted authorized contact to your bank account. If you have a family member, a close friend, or a trusted caregiver who helps you manage your finances, seriously consider adding them as an authorized contact on your bank account. Now, I want to be very clear about what this means. This is not the same as making them a joint account holder. An authorized contact simply means that the bank has permission to speak with that person on your behalf if there is ever an issue with your account. This can make it dramatically easier and dramatically faster to resolve problems, especially if your own ability to communicate directly with the bank is limited by health issues, mobility challenges, or any other factors. Having that trusted person already on file with your bank means that if something goes wrong, they can step in immediately and help navigate the situation without any delays or additional complications. So there you have it. Everything you need to know about this new banking rule and exactly how to protect your Social Security, SSA, SSI, and SSDI benefits right now. Remember, you are not helpless in this situation. You have rights, you have resources, and now you have the information you need to stay protected. Do not wait until there is a problem. Take action today. If this video helped you, please give it a thumbs up right now and share it with every senior you know who depends on their monthly benefit check. Subscribe so you never miss a critical SSA, SSDI, or SSI update. Stay safe, and we will see you in the next video.